Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day. Mukesh Ambani recently announced that Reliance Industries will demerge its financial services business and list it as a separate entity. RIL's Jio platforms and Reliance Retail are among the fastest growing consumer verticals, and tapping into their customer pool won't be a problem. So, will a fast growing consumer and merchant loan book be enough to impress shareholders? Watch our first report to find out. The September quarter results of Reliance Industries sprung no major surprises for investors. Billionaire Mukesh Ambani's RIL posted flat growth in net profit of 13,656 crore rupees, while the consolidated EBITDA came in at 34,663 crore rupees. That said, what captured investors' fancy was the board's decision to demerge and list its financial services undertaking into Reliance Strategic Investment or RSIL. The firm would be renamed as Jio Financial Services. RSIL is currently a wholly owned subsidiary of RIL and is a Reserve Bank of India registered non-deposit taking systematically important NBFC. Shareholders of RIL will receive one equity share of JFS for one fully paid up equity share held in RIL. The windfall Indian tax on transportation fuels and weak refining and polymer margins have been hurting the conglomerate's legacy petrochemicals and energy operations. This is probably why Ambani is spinning off Jio Financial Services to double down on the consumer business and put some sizzle back in the stock.
There was a subdued performance for company as a whole due to the export cess on the petroleum products. But this Reliance Group as a whole known for creating wealth in two ways: organic growth and unlocking by demerging. So many companies have demerged and created enormous wealth in the past. And I think the Reliance industry is well positioned to repeat that story.
A successful fintech loans platform draws upon the data network activity. The digital trail people leave behind on e-commerce or social media sites can be used to bind them into a strong network, which can be harnessed to encourage borrowing activity. This loop is already in place for Reliance.
So I think the lending and borrowing business, is best done when you have the NBFC company or a banking company. And an NBFC company or a banking company is required largely for the purpose of, two reasons. They have customers to whom they can lend and they have merchants to whom they can lend. Like today they have got about 1 crore Kirana stores and they have got about 16,000 of their own stores, which are basically selling to customers. So when the customer walks into your store, this is a bad customer that you can do. When the supplier supplies to your store, that time you basically do the lending to the supplier based on the merchant credit that you call it. So there are two models which are emerging. One is the merchant credit model, second is the consumer credit model. So they have the possibility of making it a large company. Today Bajaj Finance is basically doing lending of around 2,20,000 crores, size of the book that they already created. Now for size of Reliance's business, their retail business alone is 2,60,000 crores. If you look at the GMV, then the GMV would be far higher compared to what Bajaj Finance is doing currently. And that's where I believe there is a case for creating a separate company, create the liability franchisee and then start lending.
The financial services segment reported EBITDA of 89 crore rupees in Q2, with segment assets worth 95,410 crore rupees and liabilities of only 30 crore rupees. Global consultancy firm Bain & Company expects India's smartphone users to grow to 1.1 billion by FY26, up from about 750 million today. It also expects more than 850 million internet users in FY26, up from about 650 million at present. India has seen investments worth about $35 billion across segments thus far, more than doubling India's share of global fintech funding since 2016. Given this, analysts believe the group's financial services business will seek to become a conglomerate in its own right in the long run. However, the news didn't set the stock market on fire. Shares of the company fell 1.5% on Tuesday, and analysts at Nuvama Research don't expect the demerger to be a value changer for RIL. They ascribe a value of 106 rupees per share for Jio Financial Services. On technical charts, the stock of Reliance Industries is struggling to cross the 2,800 mark.
Reliance Industries is holding 100 weekly moving average support since 2017 with aggressive sentiment. Except the COVID-19 area, Reliance Industries stock hasn't fallen under 100 WMA, which is weekly moving average. Even during the recent issues of geopolitical tension, inflation, fear, and interest rate worries that led benchmark indices Sensex and Nifty to fall 18%, Reliance Industry was successfully trading above 100 weekly moving average. The 100 weekly moving average is presently placed at 2347, which has become a very crucial level. Technically, on daily chart, the stock has a double bottom breakout and it indicates a rally towards 27 and thereafter at 2800 levels. For Reliance stock, crossing 2800 level has become a struggle since last 1 year. A move and a support given by 100 weekly moving average can trigger a rally above 2800 and the stock can easily reach to 3500 levels.
On Wednesday, markets will remain closed on account of Diwali Bali Pratipada. European markets closed 1.4% higher on Monday as the news of the new occupant at 10 Downing Street spread. After steering the UK during the pandemic as its finance minister, Rishi Sunak's new assignment as Prime Minister of the crisis-hit country will not be easy to say the least. In today's Newsmakers segment, we tell you more about the UK's new PM and also talk about the challenges that he faces.
Just 7 weeks after losing the race for 10 Downing Street, former British Chancellor Rishi Sunak addressed Britain as its Prime Minister on Tuesday. Sunak's elevation to Britain's highest office marks many firsts. He's the first Hindu, a practicing one at that, and first person of colour to hold the job. Not to mention, the first UK Prime Minister of Indian and South Asian descent. At 42, he is Britain's youngest leader in more than 200 years and the first millennial to enter 10 Downing Street. A teetotaler, Sunak was born in Southampton in southern England 5 months into the 1980s to parents of Punjabi Indian background who had migrated to Britain in 1960s. His father, a retired doctor, and his mother, who ran a pharmacy, were born and brought up in present-day Kenya and present-day Tanzania, respectively. The eldest of 3 children, Sunak attended the exclusive 640-year-old Winchester College boarding school before graduating with a first-class degree in philosophy, politics and economics from the University of Oxford in 2001. In 2006, he completed MBA from Stanford University as a Fulbright scholar. This is also where he met his now wife, Akshata Murthy, the daughter of billionaire Infosys co-founder N.R. Narayana Murthy. Akshata, an Indian citizen, holds a 0.93% stake in the software giant, valued at about $718 million. The fashion designer and Sunak married in Bengaluru in 2009 in a 2-day ceremony attended by 1,000 guests. Britain's third Prime Minister in 7 weeks, Sunak had a career in finance before entering politics. He worked for American investment bank Goldman Sachs as an analyst from 2001 to 2004. In 2006, he joined London-based activist hedge fund TCI, founded by billionaire Chris Horn, and consequently became a multi-millionaire in his mid-20s. He left TCI in 2009 to set up his own hedge fund, Theleme Partners, with a colleague. As a result, he is now also the first former hedge fund manager to be a British premier. Sunak's political career began in 2010 when he started working for the Conservative Party. He was first elected to Parliament in 2015 from the safe Conservative constituency of Richmond in northern England. Since then, his rise in British politics has been nothing short of phenomenal. He joined former PM Boris Johnson's cabinet in 2019 and later that year was re-elected in the general election with a bigger majority. In February 2020, he became one of the youngest British finance ministers in history and earned praise for providing unprecedented pandemic financial support to help Britain's economy cope with lockdowns. Sunak quit Johnson's government in July this year after it was hit by one scandal after another. 16 weeks later, as he comes back as the Prime Minister following a successful second attempt, a two-front battle awaits him. Not only will he have to hold together a fractured and divided Conservative Party, he will also have to steer the ship of state through an economic crisis that got the better of his predecessor, Liz Truss. Meeting both these challenges will be vital if Sunak wants to restore Britain's credibility, which has taken a beating on the global stage. Liz Truss's economic program of tax cuts had roiled the markets and sent the British pound to a record low against the dollar. The Bank of England was forced to intervene in the bond markets to stabilize borrowing costs. Even as the British economy faces a slowdown and the threat of a recession, the inflation rate has hit a 4-decade high. British households have been hit hard by rising energy costs, which are the result of a volatile global energy market owing to Russia's ongoing invasion of Ukraine. The cost of living crisis directly impacts significant portions of the population that Sunak needs to win over to shore up his position amid political instability. His government will also have to restore Britain's fiscal credibility. The urgent task ahead for the Brexiteer will be to plug a £40 billion gap in Britain's public finances. This will call for deep spending cuts, a difficult proposition at a time when his party's standing has taken a hard knock. His father-in-law and billionaire Narayana Murthy said he is confident Sunak will do his best for Britain as Prime Minister. Markets too echoed that sentiment as the pound rose on Tuesday. It remains to be seen whether his party and the general British citizenry will support him in equal measure going ahead.
Back home, just a day after Diwali, as the news of Rishi Sunak's appointment as UK's next Prime Minister started to catch people's fancy and began making rounds of social media platforms, WhatsApp was hit with a major outage. India has a maximum of 487.5 million WhatsApp users, but of late, it has become a paradise of sorts for spammers. In our next report, we tell you more about this growing menace. Unsolicited calls and messages have become an elephant in the room. Everyone, the government, the regulator, and the corporate world knows about it. But hardly anyone, barring those at the receiving end, seems to care about it. As you step out of your bed, your phone too comes alive with rings and beeps. From real estate dealers to clothing brands, to diagnostic centers to fast food chains, everyone is vying for your attention. And just when you thought that WhatsApp was a private space out of bounds to those pesky intruders, it too has blinked. More and more promotional messages are flooding WhatsApp, and the trend has gained momentum in the last few months. According to a local circle survey, more than 1 in 2 Indians are receiving 4 or more spam messages each day, while 95% of those surveyed confirmed they received at least one spam message on WhatsApp. India is one of the biggest markets for WhatsApp, With over 550 million users and such a large user base, offers massive opportunities for brands to tap into. According to Verloop, WhatsApp messages have a 90% plus open rate in the first hour of message delivery, and brands have achieved up to 38% conversions. The traces of ad intrusions can be traced back in time a few years ago when Meta-owned WhatsApp launched WhatsApp Business in India in 2018. The platform was meant to facilitate businesses with the opportunity to connect and chat with customers directly, creating a more personal point of contact. WhatsApp Business has been a game changer for many small and medium businesses who didn't have the wherewithal and financial resources to make their presence felt online. According to a WhatsApp's report, nearly 70% of small and medium businesses say they have built their business on WhatsApp, and 77% of them hired additional staff after joining the platform. As of 2020, about 15 million in India use the WhatsApp Business app, and it is one of the top 30 most downloaded apps in the country. Initially, WhatsApp only allowed businesses to send transactional messages, such as shipping updates. Starting September 2021, WhatsApp allowed businesses to send promotional messages like discount vouchers, product launch updates, etc., raising the risks of spam. According to a report, brands had to go through a tedious process to get on the platform. However, the checks have become loose lately. WhatsApp's business policy says that in order to initiate a WhatsApp message to a person, the brand or business must first receive opt-in permission confirming that they wish to receive future messages on WhatsApp. The promotional message also included a visual element like a checkbox and options to opt in or out. However, since a policy tweak in 2020, visual elements like checkboxes were no longer required and fewer businesses were seen sticking to the opt-in design. A Ken report said that Meta is betting big on WhatsApp Business and it is expected to earn 1,000 crore rupees in 2022. It has become the second largest revenue source of the parent company after advertisements. WhatsApp charges businesses money for messages that they send. Initially, the charge was around 20 paise if a business generates a message for 24 hours. And if a user sent the first message, there was no charge. In February, the charges were revised to 48 paise for a business-generated message and the user messages to cost 29 paise for the business per session. Before WhatsApp, the spam space was dominated by SMSs and calls. Despite numerous regulations from the Telecom Regulatory Authority of India, the most recent being a blockchain-led framework, the spam menace has not subsided. The government too is now planning to rein in these pesky callers. It claims that the upcoming telecom bill will deal with such unsolicited messages. Union Minister of Railways, Communications and Electronics and Information Technology, Ashwini Vaishnav, has said that the upcoming draft bill will have Know Your Customers provisions. It will protect from unsolicited messages. But as the draft bill hangs fire, there seems to be no end to the unwanted messages. With rapidly growing WhatsApp Business and aggressive monetization plans, promotional messaging is only expected to grow. Could it backfire for brands and for the platform though? Let's hear from Samit Sinha, a brand consultant.
I don't think any kind of unsolicited messaging ever works. So, eventually this misuse of the platform is also going to impact the owners of the platform. And, beyond a point, the users of WhatsApp will also start looking for an alternative. At the moment, they have a monopoly because there isn't really too many other viable alternatives. But the day there is, users will move en masse. See, ideally, the owners of WhatsApp, that is Facebook or Meta at the moment, should really examine, whether when they see this as a revenue model, whether it's doing them actually more harm than good. And at the first level, they should take a deep dive into this, try and understand, consumer sentiments, and see whether, in the long run, it's damaging everyone's interests, including their own. So the first level of ensuring that the consumers who've signed on to their platforms in good faith, their interests are protected from, the platform owner's point of view. At at the very least, what they can do is make it easy for consumers to be able to block unwanted messaging.
As WhatsApp business grows, it is incumbent upon the social media giant to tightly regulate promotional advertising of brands and businesses, retaining the essence of the messaging platform. After WhatsApp, let's move on to markets. If you have been closely following technical analysis in financial markets, you must have come across the word trend line. But what is it? When should you plot them? And how reliable they can be? Let's find out. Trend lines are the lines that traders draw on charts to connect a series of prices together. The resulting line is then used to give the trader a good idea of the direction in which an investment's value might move. It indicates a broad trend, especially when considered on a bigger time scale, and also aids in developing a trading strategy. To draw a trend line, one considers the lower lows in terms of support and higher highs as resistance points to identify the next influential level. This could take a horizontal form as well. Day traders consider the trend lines as a support or resistance on the chart. Any breach of the same signals a major turnaround in the sentiment and thus affects the price movement. The trend line is among the most reliable tools that technical analysts use. Technical analysts believe the trend is your friend, and identifying this trend is the first step in the process of making a good trade. While trend lines provide relevant information about the trend in a short time frame, it may reflect wild swings. Therefore, trend lines help in identifying medium to long-term view. In case of short-term trades, trend lines need assistance from the volume parameter. Lastly, these play a significant role in chart formations such as the rising channel pattern, falling channel pattern, ascending triangle, symmetrical triangle, and descending triangle. Now that we have established the meaning and reliability of trend lines, let's understand when should use trend lines for stock analysis. One should look out for trend lines if the stock or the index that he or she is tracking is in an extremely bullish phase. Besides, one can use trend lines if the same has been consolidating for some time. Similarly, cases where the stock starts scaling highs without intermittent corrective moves or sees rising volume without any volatility in the price merits a look at trend lines. Finally, here are some quick tips on how to trade with trend lines. Firstly, as and when a stock or index breaks the trend line, volumes need to surge. Further, follow a buying or a decisive close of the candlestick that showed a breakout needs to be there to confirm the trend. Thirdly, referring to technical oscillators like the overbought and oversold conditions can be helpful. Finally, traders should consider the highest high or the lowest low during the last two trading sessions as the stop loss.
By the nation's trusted bank, SBI, the banker to every Indian.
Most experts believe that at least 3 touch points are necessary to define a trend line. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching. If you like this video, share it and subscribe to Business Standard.
For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.